So before you risk any more dollar in cryptocurrency trading, you may want to give me just a few minutes of your time. I'm going to walk you through what exactly cryptocurrency is, and I'm going to demystify most of the myths you've heard about cryptocurrency, and I'm going to help you understand the various markets that you can tap in cryptocurrency. In my previous video, which you can find up here, I tried to introduce you guys to a form of markets that I've traded for over the years called futures trading, specifically cryptocurrency futures trading. But I thought of it that it would be better for me to give you guys an overview of cryptocurrency in case some of my viewers don't really understand what cryptocurrency is. So the aim of this video basically is to help you guys understand what crypto is and the kind of market you can tap into crypto market and cryptocurrency, and why futures trading in cryptocurrency is a very, very big deal right now. So come with me. So before we dive into most of the things today, let us first understand what cryptocurrency really is. So what is cryptocurrency? Now, cryptocurrency is a digital or virtual form of currency that uses a technology called cryptography to secure transactions, and it operates on a decentralized network known as blockchains. Now, unlike other forms of currencies, cryptocurrencies actually exist entirely in digital forms, and they are not being controlled by any intermediary. They are not being controlled by the government or banks. So what are the kinds of cryptocurrencies out there? You might have heard of this. Bitcoin is one of them, the big one. Ethereum is another kind of cryptocurrency. Solana is also a type of cryptocurrency. XRP is a type of cryptocurrency. BNB is also a type of cryptocurrencies. And there are over about hundreds or maybe 1,000 of cryptocurrencies out there. So another question that people have is, if I decide to get into cryptocurrency markets, how am I sure that there is value in it? Or how does cryptocurrency create value? So to answer that question, cryptocurrency actually derives its values from supply and demand, which is basically like any other market that people trade: Forex, commodities, derivatives, name them, and utilities as well. It also actually derives its value from investor confidence, right? Most of this actually projects. So the bigger the investment, the more opportunity you can actually get, or the more value you actually get from that cryptocurrency. Also, network adoption. Since this is built on decentralized networks, you can actually have a couple of networks, and you can choose from. The more confidence people have in the network, the more likely they are to adopt that network. And once that network is adopted, then there is scarcity. That coin or that cryptocurrency starts being scarce, and scarcity, as we know, brings demand, which takes us back to that cycle. So definitely there is value, and you can actually look at it economically as much as you can look at other markets like Forex and the likes. Like any financial assets, the prices of cryptocurrencies fluctuate. They go up, they come down. They are not like just always going up or always coming down, right? So that's because buyers and sellers are always in the market interacting. One is trying to buy, one is trying to sell, therefore creating volatility and liquidity, which you can tap in. So now that we know what cryptocurrency is and how cryptocurrency derives in value, what then is cryptocurrency trading? Cryptocurrency trading is the process of buying and selling of cryptocurrency assets with the objective of making profit from the price changes. So when you buy an asset, think of it like when you're buying stock, you buy the stock with the mindset that one day it's going to increase in value and you're going to make profit from it. Cryptocurrency is not that different, right? So when you invest in cryptocurrency, you have the mindset that, oh, I'm going to buy this. One day it's going to increase in value and I'm going to make profits of it. So cryptocurrency trading is basically the process of buying and selling cryptocurrencies with the objective of making profit from the price changes in the market. Now, there are different types of cryptocurrency markets, and this is where people actually have a lot of discomfort, right? So you might have heard of terms like spot market, and you might have heard of futures, which is what my channel is basically about. Spot market is basically when you buy and own cryptocurrency. So you're buying it and you own it. Think of it like buying a stock and owning that stock. It belongs to you, right? You can sell it anytime you want, or you can transfer it if you want, but it belongs to you. Futures market, which is also a kind of market in the cryptocurrency, is when you trade contracts, right, that track the price movement of that cryptocurrency without you actually owning that asset. right? So it's like you trading Bitcoin, but you're not actually owning the Bitcoin, but you can actually make profit from the price movement of Bitcoin, whether it's going up or it's coming down. So both markets, both the spot market and the futures market in cryptocurrency, use the same price charts and the same market structure, basically, right? But they operate very differently, and that is what you're gonna learn in subsequent slides of this video. I had already told you that spot trading is basically when you buy and sell, buy and hold cryptocurrencies, right, to sell them when the price changes in the future. But then, in a more broader term, spot trading is a direct purchase or sale of cryptocurrency at its current market price. So think of it like when you buy Bitcoin, right? Bitcoin is one of an example of cryptocurrency. So when you buy Bitcoin on the spot market, you actually own that asset. It belongs to you, and you can hold it, you can transfer it, or you can sell it whenever you choose, right? Mostly people sell it when they see a price movement upwards, because that's basically the only way that you can trade spots. So I mentioned you own the asset belongs to you, right? So there is also a lower risk as a spot market trader. So you don't actually stand the risk of liquidations most of the times. If you're buying in a trusted exchange, your cryptocurrency is actually very safe. Some of the trusted exchanges are Binance, right? Which I'm going to talk more about this in later slides. But then it belongs to you, and there's a lower risk of theft or you losing the asset or actually being liquidated. So it's more like a long-term investment. I mentioned stock as an example. So if you've traded stock before, holding or trading the spot market of cryptocurrencies is almost similar to buying and owning stocks, right? So it is suitable for long term. You can buy Bitcoin, for instance, today, and you can hold it for as long as you want and decide to sell it whenever you want to. It belongs to you. Now, some of the limitations of spot trading are: one, the profits are mainly when the prices are going up. Almost all the time, you only make profits in the spot market when prices are going up, right? So you have to buy Bitcoin, for instance, and wait for it to appreciate in price, and then you can make profits from that. Number two is that there is lower capital efficiency. So say you invest in Bitcoin with $10,000 today, and you're investing in the spot market, you're buying it as a spot, you're going to hold that amount of Bitcoin for as long as waiting for your capital to mature or waiting for your capital to get some interest on it, right? Which means you have to wait for Bitcoin to appreciate in value for you to be able to maybe sell it. It's only after you've sold it that you can actually use the 10K that you invested in that market, right? So your capital is kind of like locked in, and you only use your capital once you're done trading that spot. That means you've sold it, and now you can actually recover your capital. So now that we know these things, right? So let me just recap in this video. What I'm trying to say here is that spot trading is basically you buying and owning cryptocurrency, right? With the mindset that one day is going to appreciate in price and you're going to make profit from it. And some of the advantages of this is that that asset belongs to you. You have a very low risk of liquidation, and it is actually suitable for a long-term investment. If you're looking to invest and hold it for a while, then spot trading is what you can actually go to in the cryptocurrency market. Now, some of the limitations are that you only profit when the price goes up. Also, your capital is locked. You cannot freely use your capital. Now, let's go over to the other part, futures trading. Now, futures trading is also a subdomain of cryptocurrency markets. While spot market deals with you buying and owning this asset, futures actually allows you to trade or speculate the future price of a cryptocurrency without exactly owning that asset, right? So what it allows you to do is you pick Bitcoin, for instance. You don't own Bitcoin, but you can actually trade and make profit off the price movement by speculating whether the price of Bitcoin is going to go up in the nearest future or come down in the nearest future. And then instead of buying it yourself, you can actually trade it as a contract, right? Whose value is actually is bound to change as the market moves. So that is basically futures trading in a nutshell. Futures trading has its own limitations as well. One of the limitations of futures is that there is a higher risk in this market. So if you decide to go into futures, you have to bear in mind the risk. And I'm going to talk you through the risk in the latest slide in this video. So stay tuned. Before then, I'd like to introduce you to a couple of terms that you would probably want to know in futures trading. And you may have heard of this: long position and short position. Now, in a long position, you are expecting the price to increase, right? While in a short position, you are expecting the price to decrease. Unlike spot, futures allows you as a trader to profit in both directions, whether you're going long or whether you're going short. So whenever, let's say, I'm still going to use Bitcoin for an example here. Whenever Bitcoin is appreciating in price, let's say currently Bitcoin is at, say, 60K, for instance, and then you speculate that Bitcoin is going to go to 62K in the next 3 days, right? You can take that trade, and if Bitcoin eventually gets to 63K in the next 2 days, you're going to make money. And if you also speculate otherwise, that Bitcoin is going to fall to, say, 50K in the next 1 day, if Bitcoin eventually falls to 50K in the next 1 day, then you're also going to make money. So you can take trades in both a long position, which means price is going up, or in a short position, which means price is coming down. So that is actually the terms you need to bear in mind when you're thinking of futures trading in cryptocurrency. Now that I've told you all these things, this channel is mainly for futures trading, but I had to walk you guys through what cryptocurrency is in just a short while so you can have an idea of where we are going to. Why do I prefer futures trading? So I prefer futures trading because, one, the futures market in cryptocurrency is open 24 hours a day and 7 days a week. It's 247, always open. It has high liquidity. Buyers are always trying to buy and sellers are always trying to sell. In futures trading, it is actually very, very high. People are always moving in money and moving out money. So you have a chance to tap into this amazing opportunity almost all the time. Also, there is a lot of opportunities in the crypto market due to its volatility, right? So apart from trading, you can actually make a good amount of money or make a fortune. I'm not promising anything. It happens, and I'm not lying to you. You can make a fortune from futures trading if you can actually tap into the opportunities that are actually there as the market is volatile. Like I said before, you profit in both directions, right? Unlike some markets where you, like spot that I introduced you to, you only wait for the price of your asset to go up before you can make profits. In futures, you profit whether the price is going up or whether the price is coming down. There is global accessibility. You can actually access this market from anywhere, almost anywhere in the world, as long as you have an exchange that you can actually log in and actually look at what is happening in the market and probably try to take a trade. It's as seamless as that. You don't need a broker, you don't need an intermediary for this. All you need is your smartphone or your PC and an exchange that you can actually use to trade. It's that simple. Now, there is an efficient capital use. Remember, one of the limitations of spot trading, as I mentioned in my earlier slide, was that you don't have that flexibility to really use your capital the way you would want to, because most of the times when you buy an asset, it's locked in and you have to wait until that asset appreciates in value before you can actually make money from it. But in futures trading, that is not the case. In futures trading, you can actually take a trade, let's say a 5-minute trade or a 10-minute trade. Either you lose it or you win that trade, but at the end of the day, your capital is free for use again. Now, if you know what you're doing, you will be able to manage your capital, which is not really the content of this video. I'll tell you about this in subsequent videos. But if you're able to manage your capital well, you should also be able to freely move your capital and use it. Apart from that, there is also an important element of futures trading called leveraging. Leveraging is basically when you use a smaller capital to control a bigger margin, right? So you have $10, but then you can control a margin of $20,000 with your $10, which means you may have to leverage up to, say, 100 if possible. Sorry, forgive my math. I'm just trying to make you guys understand the idea of leveraging. So it's basically when you use a small capital to manage a very large position, right? So that's also an advantage, if you want to call it that, in futures market, right? So that also enables you kind of like to efficiently use your capital, because if you have $100 now, You may not want to put all of it. You may take only $20, knowing fully well that you can leverage that $20 and control a very, very good position. So those are some of the should I say, reasons why I prefer to trade futures. And I've traded futures for over 6 years now, right? I started with the traditional futures, and I actually went into crypto futures in 2021. So good. Now that we know this, futures trading is not really that hard, and it's not really different from the markets that you actually probably are used to. So if you are not a cryptocurrency trader, or you're not interested in cryptocurrency in general, you may still want to stick around to the end of this video, because this part is for you. If you have any idea analyzing or trading any market, any financial market, be it stock, be it commodities, be it the traditional futures, be it Forex, then cryptocurrency futures is also a market that you can actually tap in, and you can actually make good amounts of money by just knowing what you're doing and transferring your knowledge from the other financial markets you've traded to it. So both Forex, I compare Forex because most of my viewers, or most of the people I've actually interacted with, are kind of like mostly inclined to Forex, and they try to understand the difference between Forex and futures trading. So like Forex, futures also rely on certain market elements like market structure, trends, support and resistance, liquidity, supply and demand, and discipline risk management. So if you're a disciplined trader in Forex, you can easily transfer that same discipline to futures, and it will work well if you know what you're doing. Now, the biggest difference between these other markets, for instance, Forex and futures, is that futures operates 247, and you can actually control it with a very, very little amount of capital, right? So where can you trade futures? You can trade futures in exchanges, most popular exchanges such as Binance. Binance is an exchange. Bybit is an exchange. OKX is an exchange. Bitgate is an exchange. Hyperliquid is an exchange. There are a myriad of exchanges that you can actually trade futures on, but you will have to look for the most trusted exchange. And I always recommend Binance. You can see it at the back of my PC now. Binance is actually trusted, and you can actually make the best of it by just signing up, downloading the app, whether it's a desktop app or an iOS on an Android app, get it on your device, and there you go. That's all you need. So these are the places you can trade futures. I repeat: Binance, Bybit, OKX, Bitgate, Hyperliquid, and likes. But before you go into trading futures, I may want to forewarn you of the risk, because it feels like I've been saying all the good things, and I also have to tell you of the risk involved in trading futures. So one of the underlying risks is leverage. I mentioned that you can control a larger position with just a small capital with the help of leverage, right? So what it does is it actually amplifies your profits, but in the same vein, it also amplifies your loss. So if you don't have a proper education, which means if you don't go through the proper processes of understanding how to leverage, or understanding risk management, understanding how the market moves in terms of liquidity, understanding all the core facets of trading, then you may want to hold on it. You may want to hold on extra leveraged market like futures, right? But if you know that you can be disciplined and you can stay committed, you can actually learn and try to understand how this goes, then definitely futures is a market for you, right? And that is why this channel exists, because I'm going to be producing very valuable content on trading, especially futures trading in cryptocurrency, just so that people can know and really understand that this is not really that hard. It's not rocket science to actually trade futures in cryptocurrency. So the risk basically is the leverage, mostly the leverage. There's no other thing apart from that that I can actually really, really pinpoint, except maybe you get into the wrong exchange, which is very unlikely. Apart from that, leverage is only the worst enemy that you would think of as a futures trader in the cryptocurrency market. The reason why, say, people lose money in futures is basically the same reason why people lose money in Forex. the same reason why people lose money in the commodities market, options market, or derivative markets, which is actually not really tied to the market itself. It's actually tied to the psychology of the person trading and the person not being educated enough to understand how the market goes or how trading should be carried out. And some of the reasons why you would lose money as a trader, whether in the futures markets or in any market in general, is one, you are an emotional trader. You are trading from a place of emotions. You're trading from revenge. You are trading because you have something that you want to get in probably next 1 week, and you have to rush into it. And especially in the futures market, if you are over leveraging, then you're going to also lose money. In the next video, I'm going to talk more about what leverage means and how you should understand leverage. But in this video, understand it as you being able to control a larger position with small capital in futures. Also, you lose money as a trader if you don't have a trading plan. So if you get into futures today or get into Forex, but you do not have a plan on how you want to, make money, or you don't have a dedicated framework on how you want to trade, how you want to like manage your capital, then you are going to lose. You're going to lose money. And in that way, you'll be kind of chasing losses. You're going to chase after a little trade, risking a high amount of money just to make a little. And then you cut your losses and you keep cutting and you keep cutting and you keep losing. And then if you have poor risk management, you are also bound to lose in any trading market, any financial market, regardless. And if you have unrealistic expectations, like I said earlier, if you probably want to buy a car or want to buy a house in the next 1 week, and you think you want to get into trading to get that, then that is actually a very flawed mindset. So if you can reverse these things I just mentioned, then you would be a very profitable trader and you would make money off any markets, regardless of its volatility, including futures or Forex. In this channel, since I say this channel is basically dedicated to futures trading, you will be learning things like market structure, technical analysis, where I'm going to walk you guys through trends, support and resistance, all these kind of things. I will also try to help you guys understand risk management. I won't advise, but I will help you understand what exactly risk management is and my approach to risk management. And then I'll also introduce you to trading psychologists. I'll try to kind of like make you understand how traders think and how the big movers of the market think, which is the disparity that creates liquidity and volatility. And I'm going to be analyzing the charts here live on this channel, and probably I'll be completing some trading strategies with you guys on the channel. So please do me a favor, before you click off this video, click the subscribe button, like, share this video. Please turn on your notification so you can get very, very valuable content like this. The content on this channel is going to be very plain and honest. I'm going to tell you the way it is, the way the futures market is in cryptocurrency, and I'm going to always try to debunk most of the myths or most of the things that you've heard which are not true. So remember, stay resilient and continue to push yourself. Until next time, bye.